Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick on the show today. Our guest is Joe Saluzzi. He's a partner and co-founder at Themis Trading. But before we get to Joe at 8:35, we got to talk about movers of the day. Very tight range in the SPOOs yesterday. Turnaround in Tesla. Mylan had some very, very interesting after-hours trading. Disney, of course, in the headlines with Bob Iger speaking on CNBC. And we got someone in the chat, whoever was in the chat yesterday, we'll find out who you were, who called out the airlines. Nice job. The airlines were rocking. So we're going to talk about all that and more. Joel, how are we doing in the S&Ps?
S&P futures are in the red here. We better call the plunge protection team. We are down at $1.75. Strong close, 33 and a quarter. We had a print at 33 and a half yesterday. So that is your one and only resistance. Coming back on the downside, 25.30. That's your low. Under that, yesterday's low at 25 and a half. Gold making a little bit of a bounce up, 950 at 1284.10. It's about time we got a little bounce here in the gold market. We'll see where resistance, maybe get back over 1,300. That could be a target on the upside. And you have crude in the red as well. Looked like we were breaking out over 53 and now struggling to hold the key $50 level. Well, let's bring in Dennis. Dennis, how you doing on this Wednesday morning?
Doing okay. You know, looking at the S&P futures, trade down a point. What was that you said, Joel, on the pre-market show? What was the range yesterday?
7 points, Dennis. 7-point range in the S&Ps. I mean, I cannot think of the last time, even on a holiday, that we had a 7-point range. You know how I like to keep track of the 9-day average trading range? I remember back during the financial crisis, I was doing the numbers for you. I'd be like 80 points, 90 points. You know, that's going to be the range today. And then it went 25, and then it went 20. Now it went 15. Now the 9-day average trading range is at 12 and a half, and we had a 7-point range yesterday. Unbelievable how quiet this market is.
It's so tight.
You got to deal with it, right?
You got to deal with that. You know, it's just a matter of making adjustments. Sometimes increase the size, I guess, if you're a professional trader in these, which is kind of a scary thought, but it's difficult. I mean, on professional traders, I mean, investors love the low VIX. They love the low, slow climbing market. Completely different story. Like I've seen tweets go by, or even from, you know, journalists saying, this is the best trading market ever. And I'm like, man, these people have no idea what they're talking about, because it's not the best trading market ever. It might be the best investing market ever because it goes straight up with no pullbacks. But trading is all about, you know, the whipsaws and action and show me the VIX. I'll tell you from a personal perspective, my best trading years were 2001, that was the tech crash, and 2008 and 2007 and 2009, and the financial crisis. And I could probably guarantee you most of the professional traders out there would say the same thing. Because that is, you know, the whipsaws. When the VIX is up, traders make more money. The traders that are doing, you know, a lot of, you know, inefficiency trading, arbitrage, pairs trading, relationships just get out when you have more volatility. You know, it's one thing to be an investor and love this market. And as an investor, and I own an investment portfolio, I like that the market climbs every day too, because my investment portfolio continues to grow. But it's difficult trading. These are not my best years. You know, I'm still making money, and I'm still, you know, have my streak going where I've, you know, had a lot, you know, I've had, I think, 17 consecutive years where I've made, you know, money every single year in my trading account. But it's not nearly as good as it was in 2008 and 2009. The VIX, there's a definitely correlation between the VIX and my P&L of my trading, and direct correlation. And when the VIX is under 10, I'm making a lot less money than I was when the VIX is at 30. There's just no doubt about it.
All right. Well, we got a lot of news to cover, a lot of trading ideas to talk about here. But first of all, Dennis, we got to talk about the news in the pharmaceutical industry.
Jump into this Teva, Mylan. Spencer, give us the details. This news broke at 8:08 last night. That is the time of the press release. 8:08. We're saying this for a reason, obviously. Give us the news.
Yep, it was 8:08. So Benzinga Pro, on top of having headlines from our news desk, we also pipe in press releases automatically from the PR Newswire, from all the press release services. So we got the PR in Benzinga Pro at 8:08 and 43 seconds. And so that's when this came out yesterday. And the news is that they announced
the same minutes after the 8 o'clock close in equities.
Yes. The news is Mylan announced FDA approval. The first generic drug for their Copaxone drug, and for 3 times a week treatment. So they got approval for a generic version of a drug.
And this is obviously unexpected because you're seeing Mylan pop 14% on this news. You're seeing Teva, which obviously has a competing drug, down 14% on this news. So huge moves here for these two stocks. The reason we said, it came out at 8:08 p.m. because these stocks started moving around 6 o'clock. 6:23, I believe, was the original time where he started seeing Teva move down and Mylan move up. And they moved up on serious volume. And by the time the 8 o'clock close came, Teva was down 5% and Mylan was up 5%. So I was scrambling around trying to find the news, looking for, what was the catalyst, asking on Twitter, looking around. I couldn't find any news at all. And everybody else on Twitter and stock twits were saying the same thing. They're like, what is the news here? And people were speculating, maybe it's going to be something with this drug because, but then the news comes out officially at 8:08. So obviously somebody got the memo a little bit faster than the rest of the world. And that's, nice little some money that they made on this. I know Nigerian was tweeting out too. There was some big option purchases on puts and Teva as well. So seems like somebody got the memo a little bit early anyways. So congratulations to whoever that is. Enjoy your money. Hopefully, enjoy your money as long as you can, because I don't know if the SEC enforcement's going to love the fact that you're trading 2 hours before this news came out. But that's for another story. In any regard here, I like the news. Mylan Labs, I own in my investment portfolio here, so I'm happy about that. I did take a flyer on Teva last night on the long side, which was obviously wrong, and I ate that. I'm glad I kept the position small because I was like, I don't see any news. I'm like, if there's no news, it should bounce back, which was not the case because the news came out, so I lost a little bit on the Teva position. But making on my Mylan investment, and I'm looking at MYL now here and thinking, okay, it's up here in the 37. There's a lot of, where it says price has memory. 38 to 40. That's really where we came down from when we had the big whoosh in August. If we get up into that area, I think that's where you find sellers. Joel, talk about the after hours, or talk about the after hours highs here, or the pre-market highs here, I guess, in MYL, and give us some levels.
Yeah, well, okay. First, I just want to talk about the perfect storm here to trap Teva traders, because you had just a nice little rebound after the last couple of days. You'd be looking consolidation here under 18, nice rally up. Everyone's thinking we're going to 20. And as you would say, Dennis Kaplui. But first, let's do the pre-market trading. And boy, this thing has gone straight down. We found a bottom at 1570. If I had to hazard to guess, I think the lows might be in for both of the low end for Teva and the high end for Mylan, just due on the overreaction. Pre-market.
So what was the high in Mylan?
The high in Mylan was 3804.
Yeah.
And now you're
and the Teva low.
Teva low was, Dennis is saying 1570.
Okay, 1570.
Yeah.
So we've bounced a little bit off those lows, and it's crazy volume, right? 3.8 million shares of Teva already traded, 1.6 million shares of Mylan. So, about the same dollar for dollar, because one's a $37 stock and the other one's obviously a $16 stock here. So big money trading here in the pre-market, and the real volume's going to come in at 930. Now, one thing to consider is Teva's already trading actively overseas, so it probably has an active market already. These are big moves for these stocks, and sometimes, you look at Teva and it had, where we bounced from before was 15, and Mylan had the resistance up at 40. So I'm not going to argue with you. I'm not going to make a bet with you on this one, because I think it's potential for those lows and the highs to be in as well. But these things can get ugly too when the real volume comes in. You might have some institutions that say, look, I'm done with Teva. It's starting to show some life there, in the last couple of days, and boom, news comes out and it's right back down to the lows. So, these things, can have more washouts after too. And apparently this is obviously, fundamentally very bad for Teva and very good for Mylan.
I was looking at this Teva when it came down into the middle 17 handle, and I'm thinking, okay, maybe we're finding a bottom here at 1691. But what kept me out of it was this gap. Now you have at least on the pre-market chart, you have filled that gap. Not quite yet, 1556. So I like to see it maybe get down there. Maybe not today, but fill the gap, consolidate, and now have a shot at going
If
higher.
there's any day it's going to get down there, it's today because this thing is wild right now.
Okay.
Huge volume, wild swings. I would say, if it's got a shot to get down there, it's today. So
Okay. Well, we'll see what happens with that. Let's just look at Mylan Labs or Mylan Cabs, as my buddy Hunter used to say at Oldie Discount. We hit 38.05, and we are about a buck off that. Now, the real level is 38.43. That was a high that you had in Mylan, but I don't know. I mean, when you have this kind of whoosh and then you're off at a buck, you get all these people trapped that bought this thing between 37 and 38, thinking it's going to 40. So I think they'll try and wiggle out 38.05, the pre-market high. If in fact we could get through that level, folks, 38.43. That's another level. That was your August 2nd high. Coming back on the downside, it's tough to pick where to stick out and buy this thing, especially if you're trying to go long.
It's a big pop and a perennial dog, and obviously, I liked it from a valuation perspective. I'm a value investor. That's why it's in my investment portfolio. But I look at this thing and think if this thing got up near 40 here, where there's a wall of resistance, I almost got to sell it and then just try to rebuy it lower. I still like having it just because I liked having the drug exposure. I do believe generics are okay. Mylan in a little better shape than Teva. Teva, I didn't ever invest in because I didn't like the debt situation over there, and it reminded me too much. I mean, Mylan has some debt too, but a little bit better shape than Teva here. But that 40 is just a wall of resistance. We've come up 5 points here today. I don't know if we're going to get that high. If we do, I might ring the register on this one.
What was that stock that Tracy Raniak? It was another generic drug maker. I think you bought it and sold it and made some money on it.
LCI.
Oh, there you go. How's that?
Yeah, Lynette. And you know what? This is another one that's got some debt too. It didn't have a lot of debt, and then they did some deal, and then they got a lot of debt, and then Citron came out and poo-pooed on them, and they went. That's when you had the big whoosh down there. Citron came out negative on the stock a while ago. Yeah, they did. They wrote a negative report on it, and that got me scared. Now, I was already actually, so here's the trade. I bought this thing around 17 when that guest came on. It was fantastic, and it went up to like 23 in like a week. I'm like, I'm not looking the gift horse. What is he saying? Never look at gift horse in the mouth.
Correct.
Anyways, so I sold the stock. And I'm like, if it ever gets back down there, I'll play it again and buy it again. And then the Citron issued the report, and they said it was, basically worthless. And I'm like, that Andrew Luff guy is pretty smart. I'm not going to argue with him, So I'm looking at it, and they do have some debt, and there's some issues, and he was saying that it was basically like as they were scamming, it was a whole, he's always about scams there. But I don't argue with Andrew Luff because sometimes, I think he, posts these things, get the stocks go down, but he's a smart cookie, and when he's saying something he thinks is worthless, I'm out. So I never did rebuy it. I never have played it from the long side again, just because Andrew left scared me away from it.
All right. S&Ps just hanging out near the lows of the sessions, down 275. I'm not sure when the circuit breakers are going to kick in or not.
Now plunge. I saw your little chat. Joel says, get out the plunge protection team. We're down 2 points here on the S&P. I mean, it's crazy how, there is just no pullback at all in this thing. And why would there be right now? I mean, JC Peretz saying everything's at all-time highs. There's a lot of people that are still underinvested here and hating on this market, and they've been wrong. They've been wrong the whole time. And me and you keep waiting for a pullback here too. I'd love a pullback to, get a little bit more money into this market, but everybody else apparently wants that too. And every time we pull back, even just a few points here now, they come in and we don't even pull back. I mean, even when, we've got their buddy there over in North Korea launching missiles over Japan, the S&Ps don't even pull back for that anymore. So, you have, natural disasters happening, shootings. It doesn't seem to matter what happens. S&P futures go higher. One-way trade. I don't know. We talk about the markets, being rigged, and, we have Joe Saluzzi on 835, and he wrote the book on broken markets and how the markets are rigged. But you've said before, Joel, that the markets are rigged. It's to the upside.
Oh, yeah.
You have every time you pull back, the Fed's got the markets back. They're, come out, back in the day with QE, we were coming out, but now the Fed doesn't even need to have the markets back. It just goes up. So now, they can raise some interest rates. They're getting more bullets in the chamber here. As interest rates continue to go higher, there's just more bullets for the Fed. So, what's going to really drive it down? Because if the market starts to go down like 5-10%, Fed will lower interest rates and boom, the market will go right back up. They're putting more bullets in the chamber here. So it's hard to argue. It's hard to fight the Fed. And that's what you would be doing if you're shorting stocks. So, I've learned in the last 3 years, I don't make nearly as much money on the short side anymore either. By far, in my 18-year career, I've made a lot more money trading stocks on the short side than I have on the long side because stocks fall a lot faster than they go up. But not in the last 3 or 4 years. It's been, you kind of buy the stocks. It's almost a trade like just buy, hold stuff overnight. It opens up the next day and you can sell it. A lot of the moves, and we've had Eric Hunsater on the show before too, he talks about these moves, and a lot of the moves do happen overnight. So, if you're participating that way, you do really well. I think he wrote, a piece and saying that if you weren't, holding overnight, that you missed the majority of the S&P moves because a lot of them happen between 8 p.m. and 4 a.m. when, the stocks are closed, but the S&P futures are still open. So it's all interesting, and obviously there's the possibility of manipulation in there too when you're 8 p.m. to 4 a.m. because you don't have stocks holding the futures down. It's free trading then. So lots of reasons why this market continues to go higher, but the Fed's got more bullets in the chamber as they continue to raise rates. They'll have more bullets too. It's hard to fight this tape.
Yeah. Yep. We did have, even though we haven't started Q3 earnings season yet here, we do have some companies reporting, starting with Pepsi. Spencer, you got the report on Pepsi.
I got the report on Pepsi Q3 EPS $1.48 versus $1.44, revenue of $16.24 billion versus $16.31. So a slight miss on the revenue and a slight beat on the EPS. They're going to and actually the CEO did say on the call that Gatorade volume declined in Q3. So ooh.
Gatorade. Gatorade.
Why are you saying that like that?
Water Boy.
Oh, man.
You watch Water ever? Gatorade, and he's in the Water Boy.
Oh, man.
The water sucks. It really, really sucks.
Wow. That's going back. Movie. That's going back a long time, Dennis.
Not that far. That's a great movie.
I think everyone
Gatorade. Anyways, that's Bobby Boucher. That's right, Jimmy. Bobby Boucher.
All right.
Anyways, PepsiCo not doing well because of the Gatorade. Water Boy must be winning right now. Pepsi down $2 in the pre-market here. The stock's been going down here for about a month. So 119 we topped out at. Everybody had to own it up there. Well, they're all regretting that purchase now. It's down 12 points. The stocks are out of favor. I mean, really, it's a dividend play. It's 3%. You're starting to see, if interest rates start to go up, and it's not like Pepsi's a pure on, it's a little bit of growth in there, but Coke's come off the highs. You start to look at other food stocks. The food stock's been absolutely annihilated. That's a little bit maybe more to do with Amazon, but it's all about the growth stock still right now, and Pepsi, not a lot of growth there, and it's coming off here in the last month.
Ugly chart, pre-market low 107.07. We're getting a little bit of a bounce off that. We had a gap down a few days ago. I think that's when the TLT and some of the other dividend stocks got hit. Continuation through the pre-market low. I'm going to have to go back a while to find a daily level for you. And that would be, wow, I have to go way back here to find a daily level. Well, 107.21 was your low back on February 17th. So that's given a little support to that pre-market low. So down $2 if you want to take a shot at the whole number. If in fact you take that out, two other daily lows to contend with, and I would jot these down if you're trading Pepsi and you're looking for more downside. 106.32. That was your February 16th low, and your 15th low at 104.77.
The other earnings stock, Monsanto, MON, is getting a little bit of a lift here in the pre-market. I don't know, Monsanto. Is that merger going through? I think it is. I think it looks like it's going through. I mean, I don't know what the original price is. It's been so long since this has been running through antitrust and trying to go. I feel like we've been on this for years. I can't even remember who the suitor was. Was it Bayer?
Yep.
Who's buying it? Was it Bayer?
Yep.
Anyways, so Monsanto here trading up on their earnings report. I don't know if their earnings matter because they're going to get taken out, or they are in the process of getting taken out. But apparently they do matter because it's up $1. Spencer, details, MON.
Well, EPS was 20 cents versus a 41-cent loss estimate, so they beat that by about 60 cents. Sales of $2.69 versus $2.53 billion.
Stock up $1.14. Joel, thoughts, concerns? Does it matter the technicals when stocks are getting taken over?
I don't. I guess it does matter because you spiked up to a new all-time high at 122.57, but you're now,
Really?
yeah, yep.
But they faded that. I should have been out there fading that, but I was doing a live radio show.
That was actually before the show started, but
Oh, okay. So I should have.
anyways, maybe not. No, wait, let's see what bracket that was on. Yep, that was on the 8 to 8:15 bracket.
Oh, yes, I was doing a live radio show.
You were.
And remember my rule: don't do a live radio show and initiate crazy trades.
One night.
Calm trades, little conservative trades you can. Don't go in there and start trading Mylan Labs and Teva when you're doing a live radio show. It's the best tip I can
But Dennis, you weren't doing a radio show last night when you lost that money, okay?
No, I know on the Teva. I shouldn't have nibbled on the Teva. I just nibbled, Joel. I was like, I'll have a little nibble here and just, just in case, because I don't see any news either. And the thing's down $1 here. I'm like, maybe, this guy doesn't know anything. No, somebody knew something.
Where'd you buy? Can I ask you where you bought it?
I think I bought at, I think it was around 18, right around $18. So I lost a couple points on a light position. I'm talking like very small, like 1/4 of my normal size. And I lost $2 on it. So I was like, lucky I went only 1/4 of my normal size. I was like, I'll just take a taste. And yeah, that's a taste of, insider punishing me.
Did you look at it like right after you? Because it looks like if you bought it at 18.
It was hung there for 2 hours.
Oh, I got
It was between 1780 and 18. The news didn't break. It closed at around 1780, I believe, at 8 o'clock. And then the news came out at 8:08, and then obviously reopens at 4 a.m. and kaplooey. So because everybody's priced in the news now, but no news. There was no news. There was no news at before that. But that's for another discussion.
Okay. I didn't mean to rub salt in the wound there. Teva, or excuse me, going back to the Monsanto. If you are trading this, I think the takeover price was right here around 120. So I'll just keep an eye on that closing price from yesterday. 119.69. That's not its all-time closing high. All-time closing high is 119.82. No, 120.33. So keeping an eye on that all-time closing high price of 120.33. We stay above that. Pre-market high is 122.57.
Let's recap some of the action from yesterday, and the big moves there of the day was in the airlines. And I want to get some props to Spinner. I know we were talking about on the show a little bit too, but we were looking for laggards. And I saw Spinner say in the chat, he's like, laggards, what about those airlines? And, wow, timing on that one there, because those airlines blasted off into orbit there yesterday. They started flying. No pun intended, well, kind of intended. 56 to 58.5 on LUV. Save Spirit Air. I own that one in my investment portfolio. The only one I got. I wish I had some more. $33 up to $36 yesterday. JetBlue takes off. Goes from 18. There's a lot of puns in here. Takes 18.58 up to 19.82. So that's a $1.30 move for JetBlue. Delta DAL goes from 48.15, opened right up the low of the day, closed right up at the high of the day at 51.37. Airline said we are flying.
And if you are trading these airlines or have them on the long side, you want to look follow through yesterday's high. The SPOOs are a little bit weak, down, $3 now. So what you want to do on this kind of move, for example, in the Delta Airlines, I got a 51.25 print here as the close from yesterday. And you had a high at 51.37. That coincides just under the August 7th high. So on these kind of moves after a big day for Dennis's 2-day move, you want this thing just to open up, hold 51 and keep on going, or else look for a little back and fill.
Ace talking about real good solar RGSE. It does appear to be your mover of the day. Ace is always going to find these penny stocks that are moving. 143% this thing is up here. $2 RGSE. Spencer, what is the headline here? That must have been a real good news.
Yeah, on RGSE. I was actually just looking myself because I didn't see it before Ace brought it up. So good. Wait, RG. I spelled it wrong.
RGSE.
Yeah, that's why. There we
go. Talking real good solar. We're talking real good news.
Yeah, we have. No, not there. I'm looking in the wrong spot. Sorry, guys.
All right, Spencer. We threw him under the bus. He wasn't ready for us here. It's Wednesday morning. It's not like it's the middle of the week and he's had. Oh, it is. Sorry. Real good solar. Dow.
Okay.
Okay, so RGSC Energy and Dow signed exclusive license agreement to commercialize Powerhouse. I don't know what that is. I think it's a solar shingle. Okay, so RGSC looks like they're doing something, some type of solar shingle here, so commercializing it. So I don't follow RGSC closely. Maybe that's what they do. We're all good solar, but looks like they've signed an agreement with Dow.
Well, to me, that March 2014 high of 60,800 is safe. I don't think you have to worry about it going up.
What is that? Stop. What is the all-time high?
That's not even the all-time high. Your March of 2014 high was 67,800.
So you're telling me this thing's done a few reverse splits?
Yeah.
We don't think we're seeing that today. Joel's throwing it out there. I'm not betting my lunch on that.
Okay. I mean, if anything we've learned in these kind of stocks over the years, don't stand in the way. If you're long this thing, congratulations. Just let the volume peter out throughout your offers at the half and whole numbers. And when you're not getting lifted, then hit it on a downtick, because once these things start to go, pretty good volume. I mean, there's absolutely no way of predicting where this is going to go. What was the volume yesterday? Volume yesterday was 143,000. The value just traded in the last bracket was 126,000. So
this is a huge headline. And it looks like it broke 10 minutes ago here. So RGSC, I'm just looking at it. It's coming, I'm just actually on their website here now reading it off. And it says RGS Energy has entered into an exclusive domestic and international license agreement with the Dow Chemical Company for the Powerhouse Solar Shingle System, an innovative and aesthetically pleasing solar shingle system developed by Dow that has been deployed on more than 1,000 homes. So, that's a good, when they get in with Dow, it does sound like pretty good news here. I'm not sure the market cap on this. I'm not sure the sustainability here. This is going to be something that's really going to keep propelling it. But obviously today, that is your catalyst.
That is your driver. 220, your pre-market high, 208.
You're talking about a company that has a $6 million market cap only. Joel, you could buy this company.
Yeah, let me go see what I got in my checking account. I just want to see
$6 million is now at 12 million. Obviously, just doubled, but or more than that. So it's up to 15 million. This is a small little company. These little $4, $5, $6 million companies can do a lot of fun things. These can really move quickly. So difficult. The first thing you always look at, like when you're seeing a big move, is okay, what is the float? Okay, what is the market cap? And that gives you a feel for when you see $6 million companies going, they can move like an incredible amount. So not surprising this is up 130% or whatever it's up now.
All right. Mylan Labs, scratch that bet on pre-market high, being in 38.31. That's your last.
I'm telling you, man, if this gets up near 40, that's big wall of resistance. I'm selling my stock. Yeah, if it gets up there. I'm going to try to rebuy it, though. So it's going to try to be a scalp. Should I not be scalping my long-term investment portfolio?
Yeah, you've been doing that a lot lately, Dennis.
I have been. It's a trader blood coming in me. I got to stop doing that. I've been trading my investment portfolio too much. And, usually I don't log into my investment portfolio and then I don't, think about it. Like I had that one stock that got taken over and I didn't notice for 2 weeks. But with Mylan Labs, I know I own it because I was down in it too, actually. I'm back. I'd be up now. But, I'm looking at it here. And when it's up 17%, I know I own it in my portfolio. It's hard not to look. It's hard not to think when you get a 20%. It always gets me when you get these 20% moves in one day. You're like, ooh, that's a lot of money really fast. I better ring the register. And sometimes
it's your instincts.
That's what kills me right there. It's when they climb like 1-2%, it doesn't get me. It's when they have these huge moves in one day. That's what gets me.
All right, CLSN tripled yesterday. Must have had some good news. Went from $2 to $6, and now you're pulling back a little bit here in the pre-market trading. You got a pre-market low. You got a little bit of profit taking. A pre-market low at 530. Boy, oh boy! I think on this one, the 4-point move yesterday alone. Man, I think to really get interested in this thing in the long term, I'd have to see this closer to $4.50, because you're not getting the continuation of the move that you had yesterday. So I'd wait for this one to back and fill a little bit. It looks like a one-day wonder.
I mean, and then you look, it's coming off here now, and it's trading on significant volume. I almost wonder if there's another headline or an analyst commentary or something like that, because when you get the big move up and now you start seeing it whoosh like this, right back down, sometimes continued volatility, but it's already traded 1.3 million. I feel like some analyst somewhere said something, or something else happened with a news release. I don't follow this company at all, so I can't tell you anything, but
Correct.
just from the trading action, that looks like news to me.
Or someone just ringing the register too. I mean, if you bought this,
Very
like,
big register, very quickly too,
yeah.
because it is moving. That looks like news. And CLSN, if you got the news there, let us know in the chat. I'm just too lazy to look it up.
Okay, yeah.
Unless, Spencer, you want to go hunting in the background, you could do that. Let's move on to some of the bigger stocks here. Tesla. Tesla has the turnaround, what do we call it? Turnaround Tuesday for Tesla, which, was a nice turnaround there too, bouncing obviously over 13 points. The party continues here this morning. Last night after the bell, Nomura initiating with a buy, putting a $500 price target on it. Spencer, I'm not sure if you've got this report. I'd love to know how they're justifying $500. Just not saying, it can't be worth $500. I'd just like to know what their thought process is here as they put a $500 price target on it. So that's why it's up a couple bucks here in the pre-market, getting some love from Nomura.
See if I can track down the actual note for you.
Okay, so he's going to go hunt the note. Joel talk technicals while Spencer goes note hunting.
352.80. That is your pre-market high. We pulled back to 350.30. I have a number I like in Tesla, and I'll give it to you, folks. There's a double top at 351.24 and 351.49. So we are trading just a buck away from that. That was a double top on the daily chart, so I'll keep an eye on the price action of that. Above that, you open up into 357.47, but 351.50. Coming back on the downside, if I was short or felt that I absolutely had to own this stock today, I try and bring it in at the close of 348.14. And if that doesn't hold, boom, there's a lot of air underneath it. I mean, I was looking at this one, I believe on Monday. I'm thinking, wow, this is a nice pullback. Maybe I should dip my toe in the water. And then the news came out, and I just took it off my screen, and it just gave you a really good opportunity there. Big move yesterday, 351.5. That's the level on the upside.
Were you able to hunt it, Spencer? Or are you still looking?
I'll just read you the first paragraph of the note.
Yeah.
So, we forecast an unprecedented run-up in Tesla's revenue. They made $8 billion in revenue in 2016. Nomura sees that number growing to $58 billion by 2021. Easily one of the fastest ever by a multi-billion-dollar company. We believe that Tesla, 1, has an insurmountable lead in vehicle range per dollar. 2, benefits from what we believe is a largely inferior competitive field, which should help sustain current growth. And 3, overcome Model 3 production constraints. And 4, could generate mid to high 20% gross margins by 2020.
Well, that sounds bullish.
Yes. Yeah, I'd say so. I'd say a little bullish, yeah.
Anyways, Tesla. So lifting $2.50. We had a big move yesterday here. Not seeing a lot of follow through, which is a little concerning because this was up to 351, almost 352 last night on this news, and it's not really follow through coming in here today. So that's somewhat concerning. But I like my 2-day move. That move was against the trend for the last 2 weeks, so I would still be on the side of Tesla long just for the 2-day move. Still, valuation long term scares me.
All right, we got 2 minutes before we bring Joe Saluzzi in. I guess we'll go right into the Ford news here, and Ford's trading down 15 cents.
Giving her back.
Yeah, I don't know. Is it too little too late, Spencer? Do you have any of the details on their plan to get in electric cars? Wow, what a great idea.
Yeah, sure. So yeah, they're aiming that by 2019, 100% of all new U.S. vehicles will be built with some sort of connectivity. So that's not electric, that's just connectivity, which is still, the next iteration of transportation, not quite as far as Tesla, but some sort of connectivity there. They're mostly what was talked about was just reallocating capital and where they're going to be spending money on and how they're going to be spending money. So they're reallocating $7 billion from cars to SUVs and trucks. They're focusing on partnerships, on M&A, on R&D, which we all knew already. They did reaffirm their guidance for the fiscal year, and they said that they're going to announce their 2018 outlook in January. That's all I got.
Yeah, they're hitting it, and just.
It was running into the book is so thick on a stock like this, and like I look at the book and I just see orders everywhere from Ford. I took out a lot of them yesterday because it was the good numbers that they came out with. But when you start looking here at the book, it's just littered with sell orders from 1440, probably all the way up to 15. There's just a lot of big orders. It takes a lot of size to take that out, and it was starting to run into a wall of resistance as it got near or closer to 1250 again. So like I see 1238, 16,000, 1240, 40,000. 1242, 17,000, 1244, 15,000, 1245, 50,000. Looking in the New York open book, a lot of orders. It's hard to get through all that stuff. And now, the path of least resistance is down because it's just ran through all that area. And the news not that great here from the call last night. So there you go.
Two things I actually forgot to mention. September auto sales were up 8.7%. They're also overhauling their China plant. Don't know what that overhaul will be yet, but they're going to change their plan for the world's largest market. So we'll see what happens there. But 8:35, it is time for our guest. We're going to grab Joe Saluzzi on the fly. So I'm going to give him a call.
Oh.
Now, Joel, correct me if I'm wrong, but doesn't his assistant usually answer?
Yeah.
That'll be fun. We'll do that on the fly. This will be fun.
You got something for the assistant, Dennis, or do you want me to take it away?
No, you go. You're always a good job with this, Joel.
Okay.
Joel's smooth. He's a smooth talker.
Okay.
Let's see if we get anything on this. Make sure I got the right phone number. Yeah, I got the right phone number.
That's why we don't do it on the fly, Spencer.
No.
Call some.
Spencer, did you get your coffee yet, Spencer?
He was here early today.
You didn't get your coffee yet?
I did. We've caught him before on the fly. Let me try him again on the fly right now, and if I don't get him this time, then we'll take a break.
The pressure's on. Come on, Spencer.
No. In the meantime,
we'll give you a live look behind the scenes when we normally have a commercial.
And then Dennis already tweeted out that he's coming on.
He's better come on now. I just tweeted it.
In the meantime, Dennis, give us a quick look at imbalances.
All right, imbalances. Sorry, Joe. I know you're probably listening here. We're coming for you. GE, 129,000 shares to buy here this morning. That one stands out. It's kind of turned around in GE the last week or two. Starting to show some life. Square has a buy and balance every single day.
Trading with Scott.
Hey, Scott. It's Joel and Dennis Spencer from
Dennis and Joel.
How you doing?
I'm doing all right. We're not on the air right now, are we?
Oh, we're live.
Last time I started talking.
Swear. We're live.
We're live. And the reason we want to talk to you is because we know there's always good jokes on Trading Desk, and we certainly need a good joke. You got a good joke for us?
Well, I don't actually have a joke, but I have a question that's been fed to me.
Okay, go ahead.
And so we were supposed to ask which one of you guys? I don't know which one.
Dennis.
We're supposed to ask you about the dating game.
Dating?
Something about a dating. Ask him a dating game question.
Okay.
It's not ringing anything to you? I don't know. Maybe. I'm going to let you guys think about this. Joe's about to pick you guys up.
Okay.
All right. Joe, come in here. I don't know about any dating. No.
All right. I'm not sure what the reference is, but Joe, it's actually coming from the city of Chicago.
Okay.
All right, guys. Have a good one. Bye.
Hello, gentlemen.
All right, Joe. We're totally lost here.
I don't know. It was some sort of Twitter comment. I don't know what's going on.
There's some crazy Twitter comments.
You just end up getting in trouble with that Twitter, right?
I don't think I tweeted anything about a dating game, but I did tweet about you coming on here, Joe, and I see you already retweeted. Yes. Thanks, Joe. Joe, what's going on this morning?
It's always something in the market structure world, that's for sure, and the markets themselves, right?
Well,
what do you guys?
Well, what are you watching? Are you looking at this consolidated odd trail? Are they ever going to get this thing going, or what's the deal with the consolidated odd trail? The cat.
The cat, and it really is one of probably the two biggest things I think that people are talking about in market structure. One being the access fee pilot, or the potentially changing of how rebates work right now, and the industry is kind of messing around with that. But I think the cat is really the important one right now, and you could probably get to hear more about it at 10 o'clock when SEC Chair Clayton's going to be testifying before the House Financial Services Committee. consolidated audit trail we've been waiting 7 years, right? Everybody remembers the 2010 flash crash. Right after the flash crash, one of the first guys out of the gate, Senator Ted Kaufman from Delaware, said we need a better surveillance system because it took the SEC 6 months to figure out 6 months or maybe longer, right? Depending if you ask Nav Sorreo. But it took them too long to figure out what was going on because of the way markets are set up now. We don't just have one bucket of liquidity. 80% of the flow doesn't go to the New York Stock Exchange anymore like it used to. It goes to various venues, including 12 stock exchanges and numerous amounts of dark pooled and off-exchange venues. So how do you piece that all together to figure out if there is a spoofer or someone's layering? So the industry came up with the CAT, which is the Consolidated Audit Trail. It finally got approved, right? And they put it out for bid to see who was going to build this thing. And they actually they didn't select FINRA. FINRA was in they were in the running of the final three to actually build it and run it, which is our, the industry's main SRO. They ended up selecting a company called Themis Technologies, who built Midas, which is actually an affiliate of TradeWorks, which was run by Manoj Narang, which is an HFT firm, to build the CAT. Okay, so we're going through this whole thing. Fine. If you want to call it that, okay, it's a private firm. I don't have a problem with that. But now the industry has decided that there's too much information in the CAT, that they're requiring personally identifiable information that could potentially get hacked, right? Well, anything can get hacked. We know that, right? But they're trying to kill the CAT. So I wrote a note actually this morning. I just sent it out to clients saying the CAT just lost one of its lives because three congressmen just today decided to tell the representatives, it was Henseling, Heisinger, and Hultgren, and they've asked the SEC to delay the CAT. So you can sense in my voice the frustration. After 7 years, we still don't have a consolidated audit trail. Why? Who doesn't want it? Think about that. Who would benefit from not having a good surveillance system? Who? The largest clients, maybe some of the customers are doing some spoofing and layering, maybe some of the exchanges who make a lot of money off those clients. Doesn't make any sense to me.
Yeah, and like you said, 7 years in here, and this has been a discussion forever that I've saw going on my stream as well. I follow a lot of market structure people. I follow you as well, Joe, and it's got to be frustrating. I mean, when you think about this, we can't even, properly see what's happening out there because, liquidity is everywhere, like you were saying. We need something, and, here we are,
Well, I tell you why. FINRA has done tremendous work over the last couple of years. They've put together, they've kind of, think of a quilt, right? A large quilt, and you're kind of piecing it together. And over the years, what FINRA has done with their cross-market surveillance is patch together this entire quilt where they look at every exchange and they can kind of get to that exchange, but it takes a lot of time and it's very tedious. But what they've done is they've created new ways to look for, Robert Cook, who's the chairman of FINRA now, said that they're using machine learning to identify situations like spoofing and layering and algo gaming. And what they've done is every time they see something, they go to the SEC and they make a referral and they say, hey, look, we found somebody doing something bad. Or they send a report card to that firm doing something saying, hey, you better keep an eye on your guys because we see something going on. And what's happened is they've been seeing a lot less instances of this layering and spoofing and market manipulation just because I think that they know that the people, the bad guys know they're being watched right now. But wouldn't it make sense for FINRA, who has all that expertise and all that experience, to be the ones to run the CAT, to now have all the information and not have to go to an SRO and ask for that information or to go to an off-exchange facility to find out what's going on? They would see it all and they would use their experience and we would have a much better surveillance system. And I don't want to hear this. I don't want to hear this BS about cybersecurity because everyone's using that because of Equifax and the Edgar hack, and they're going to say that this could be hacked. Well, anything could be hacked.
Just an excuse to delay it.
It's an excuse, exactly. Thank you.
Yeah. Joe, multiple questions coming from the chat here, and obviously we've got some listeners that don't follow market structure as much as you do. Can you explain spoofing and layering? Just give us a quick explanation of what that is.
Sure. Layering is, let's just go with spoofing. Someone's placing a bid out there, and they're not a bona fide buyer. They're trying to move the stock. Maybe they've got 2 or 3 sell orders actually up a little bit higher, and if they think that if they post a bid, someone else will post a bid ahead of them. Maybe somebody will take the stock, and then they'll go out there and sell the stock. So they're trying to artificially move the stock with no bona fide intention of, no real intention of buying it. So tough to prove, but actually under Dodd-Frank, the recent rules changes, a couple of years back, the CFTC actually got more leeway in trying to take those cases, and actually not as much evidence is needed, or not as much intent, I believe it. I forgot exactly how they said it, but they can go after you quicker, and we've seen more spoofing cases come about. Layering is where you're placing various, bids and offers in the book, again, to try to manipulate the price with no intention of actually buying or selling that stock. So both are illegal. Okay, both, if the SEC or FINRA sees it, you'll have a problem. But the problem is, when you've got various destinations and various market centers, it's really hard to find out who's doing what nowadays.
Right.
And that's why one of the things in the CAT is that they wanted to put on an identifier, so you would know who's who, which customer, where's it coming from. And that's the whole problem right now, where the industry is saying you have too much information there, and that customer information could be susceptible to hacking. But you need to have an identifier. Otherwise, you could be somewhere in the middle of, I don't know, let's just call it somewhere half around the world, and you're a customer of some brokerage firm who's a customer of somebody else. You'll never find them. Right?
Yeah, they could be even a country, in some small little country there, that we can't even go and, in some out of jurisdiction, you can't even go and prosecute them. So it's difficult to tell where this is coming from. Joel, you always made a good point there, and you used to talk about this in the pit back in the day. This would self-police itself, Joel. And I remember you saying, a story there, like when somebody would throw a fake bid up there, because you were in the futures pit. What would they do?
Well, it would be more like, let's say Goldman Sachs or Morgan Stanley, came in with like 500 to sell at 30 even. We're using a round number here. Well, some of the big locals that were short, that want to push the market down, they'd be like 3,000 at 30 and a quarter. Oh, okay. All right.
Behind them, because they're safe.
Okay. They're not gonna lift Morgan Stanley for 500 at 30, and they're gonna lift you for 3,000 at 30 and a quarter. So and they would get a warning. Hey, you're off the market or something like that. But it was just working their position, and of course in this electronic world, I mean it's probably impossible to trace.
Well, there was it wasn't anonymous back then. So when you're in the pit and you do that thing, well, they can physically see this guy giving the warning, and they can give him a warning here. And what Joe's arguing here is, if you don't have a consolidated audit trail, you can't even find the person to give him the warning.
Right. You know what? Because you had a central pool of liquidity there, right? There was one place to trade, if essentially, which is similar to what goes on in the futures market now, right? There still is a very, deep pool of liquidity, if you're calling it, in the E-minis or whatever it may be. But the problem is also with this CAT is that it doesn't have cross-asset surveillance. So it has stocks and options, but it still wouldn't have futures. So in other words, somebody could be spoofing the futures and trying to, let's just say, have an offer to sell the spiders at the same time. You would never know, even with the CAT. They would never catch them, because they don't know. The two markets aren't talking to each other, because the SEC regulates the stocks and options, and the CFTC regulates futures. And those are two different entities, and unfortunately, they don't talk.
Joe, changing the subject a little bit, another question coming from AG in the chat there. He's asking about the recent low volatility, and obviously we see the VIX now is trading under 10. He's saying, is that anything to do with market structure? I've got some thoughts on this. What are your thoughts here? Do you think, low VIX, anything to do with market structure?
I think that you might see at the end of the day, you got that VIX hasn't changed much, but there is still intraday movements going on. There's still intraday volatility out there. I think that the markets have changed, certainly, where the dominant force is now, I don't know the percentage, but ETFs are, I think it's like 30% of the trading are ETFs. So you don't have that same type of active management going on. So maybe that is part of it, where, the tail does chase the dog there for a while. I don't know, but that's not really a market structure thing. That's more of a passive versus active. And I'm not saying one's good versus the other. It's just, it is what it is.
Wait, Joe, I'm actually glad you mentioned that, the passive and active thing, because I was reading this morning, actually. So BlackRock came out with a note, and according to BlackRock, only 18% of the $67.9 trillion global stock market cap is owned by passive index tracking investors. And according to them, 25% is owned by global, is owned by institutions, and 57% is owned by the governments and pension funds and big corporations. Does that seem right to you? 18% is passive?
Yeah, and you know why? I know that does seem right because I think the difference is there are passive, indexes the ETFs that track the index that are more for investment, right? And those are going to be the ones that are held. You'll see the securities being held by the, if you look at any holdings list of any security, the top three are usually the big, passive funds, the big ETF funds. But that's good, and that's prudent type of investors who are going out there with long term and so on. But most of the ETF trading that's going on, I think, is mostly whether it's hedging or speculation, and it's not in those type of ETFs. It's in more speculative ones, whether it's the reverse quadruple Qs, what are they coming out with the quads yet, or the inverse ones, and so on. That's much more speculative, and I think that's where you're seeing a lot of the trading. So yeah, 18% does seem about right.
Does that do anything? Because I guess I'd always just assumed it was larger because you hear so much about the shift to passive. I guess I'd always thought. I can't imagine what the number was 10, 20 years ago before all these index ETFs came in there. It was probably like 1%. But
yeah.
Does that?
So I was going to say the one thing with all this ETF stuff, and I wanted to finish maybe asking you this, Joe, and I think you've commented on this before, is you kind of get all these ETFs that keep getting launched all the time. I mean, we almost got more ETFs than stocks. And, a lot of these are similar in nature and they hold, similar stocks. And you wonder if, the correlations between, certain stocks that seemingly fundamentally don't seem to be that correlated, but they are all of a sudden, isn't because of the ETFs.
I don't know. I think a lot of those new ETFs, but what is that, 3,000 of them, 2,000, a lot of them are speculative, and they're by these ETF companies that sometimes we've never heard of that are coming out, and they're launching them hoping to catch the next best thing, right? And if it works, wonderful, and if it doesn't, they shut them down. And there's, I don't know what the numbers are again, but numerous ones shut down during the year, maybe more than actually get launched. So it's a speculative thing. I don't think I'm not really. I don't look at those as investments, right? As more as they are trading vehicles. But listen, investors want passive, and investors want index tracking. Then you give them what they want. The market runs. The market dictates what they want. However, I think active is still doing very well, and people think that active's dead, and it's not dead. There are money managers out there who are doing the job, who are kicking the tires, who are finding their funds. Unfortunately, some of them don't have investors who last long enough. Particularly if you're a short money manager and you've got a fund focused on short ideas, you tend to get carried out in this type of bull market. But they're doing the job, right? And they're doing the research, and the market really needs that. And by far, I think active's still doing fine. It's just that passive has come on the scene, and it is dominant for certain types of investors. But active is also still doing fine as well.
Joe, you got to give the people what they want. Give the people what they want, and they want passive.
The market speaks.
Yes.
Exactly. If the market speaks, you give them that until they don't.
Give the people what they want, as Jalen Rose says. Joe Saluzzi is a partner and co-founder at Themis Trading. Joe, thanks so much for hopping on today.
And Joe,
thanks, guys. We'll talk to you soon.
I want an email from Scott explaining that dating thing. All right, tell him he cannot go to lunch until I get.
Check my Twitter tweet. No, take a look at my Twitter feed and see who sent me a note. You'll see it.
Okay. Thanks, Joe.
All right, guys.
Thanks,
Take
Joe.
care. Have a good one. Bye-bye.
Always great talking to Joe. Always great talking.
He calls everything the way it really is. I mean, he's out there. I mean, him and Saluzzi have done some great work at Themis Trading. They were the first ones basically back on this. And they got me interested in market structure back in 2009, just reading some of their white papers, on equity toxic trading. And you start digging into this stuff, and, obviously, it's actually quite interesting, especially when you're a trader. It's interesting to always look at the plumbing a little bit there behind it. And I feel like I'm a better trader because I understand the plumbing as well. So, and these two guys know the plumbing of the markets very well. And if you don't follow Themis, Themis Trading there, Sal Arnick and Joe Saluzzi from Themis Trading, and follow them on Twitter. Look those guys up because they can learn a lot from those guys.
And Dennis, you're in their book, Broken Markets, right?
I got a page. I did get a page in their book, and that was, because I've always kind of been the one, ranting about off-exchange trading. I know a couple of people on our chat, Jimmy A, not a fan of off-exchange market making, internalization, and I do believe that does impact price discovery. I know Joe and Sal are on the same side of the argument there too, so appreciate everything they do in that field as well. But we're not going to take this all into market structure. We've been going for almost 20 minutes on market structure. We got to take it back to the stocks here and talk about what is going on. If you do want to follow Joe Saluzzi, Joel just put his Twitter account in the chat there. But jumping back over here into ratings land, we had a few ratings changes here this morning of interest. Stiefel a little bit busy there this morning. They are downgrading Winnebago. They're also downgrading Waste Management. One I want to look at is WGO, though, because this stock has been on an incredible run. We've been talking about it in the chat. I mean, Winnebago, somebody made a joke yesterday, maybe Tesla should get into Winnebagos here because WGO has just been a monster performer. Unbelievable. I guess these things are hot again. Here we were 3 or 4 years ago, Joel, saying, I don't know about Winnebagos. Well, all it took was cheaper gas prices or a little bit of lower oil price, and WGO has been hot for a couple of years here, but it's been blasting off.
Didn't we say that like a year ago? Like we had this exact conversation like a year ago. Like,
well, this is what happens. You run out of material and you have to relive the conversation.
No, but it was the same thing. It was like Winnebago. Oh, look at them. Oh, who knew? It was like this is deja vu for me.
I know. Well, now, but where was it a year ago? Who knew? You had to keep buying. Actually, no. You know what? About a year ago, it's like had that pop off high at $39. Probably when we started talking about it, and then it came back to 25. Well, now it's up at 46. So maybe we're the high here, and that's why I was pointing it out. Sometimes it takes an analyst to come out and downgrade the stock to get the thing going in the other direction. Ball's been rolling in this direction for a long time. Basically, in the last month, stocks went from 35 to 46. You're talking about a 30% move. Now we look at it, it's trading down here in the pre-market on the Stiefel downgrades, down 2.5%. This is one I'm not coming in here and buying right away, though, just because I think there's a lot of people who have been on this bullet train here, and sometimes those trains, don't empty very quickly.
Yeah, this one made an all-time closing high on Monday, 46.50. The all-time high right there. Pre-market low is 43.90, so I'll keep an eye on that. Unfortunately, if that doesn't hold, you got continued downside. Perhaps let's go to the dailies here. You have a, 5-day low at 43.67. But you know what? One of my 43.67 may see that. What I've always wanted to do, and I've talked to Lisa about this for years, is rent one of those things and actually go to a Michigan football game. The problem is she won't let me drive it. She just figured there'd just be too much.
Too bad of a driver.
Well, yeah, and if I have,
you'd be running cars. You know what would happen is if Michigan lost, you'd be so angry you'd just be running over other cars with your Winnebago there, just out of anger.
Yeah. So, but wow, this thing.
You're too emotional at those games to drive a Winnebago home.
Exactly.
If they won, you'd be okay, but if they lost, you'd be in trouble.
Yeah, and I also, if I had a few pops, it probably wouldn't be a great idea. Yeah. Anyway, so
yeah, exactly.
All right, keep an eye on that pre-market low. 43.90. We got a few minutes here. What were the Texas Linda is saying yay for UBS upgrade of Netflix NFLX. We haven't looked at that one in a while.
No, did that? That must have just happened the last hour since we're on the radio show. I didn't notice that one. Spencer, did Netflix catch an upgrade?
I actually didn't notice it either. Nice catch there, Linda, because I didn't see it at all.
Maybe this just happened in the last hour.
Linda, do you want a job at Benzinga on the news desk? Because we could use you on that. Netflix, we're getting a pop-up here in the pre-market trading. NFLX, kind of a quiet couple sessions. You found a seller here at 181.73. Let's see how that looks on the dailies. Yeah, a high at 181.95. So, no, I scratched that. No major resistance until the double top at 182.80 and 182.90. That's continued upside in Netflix. That would be my target.
It looks like not an upgrade, but a price target, right?
Yes, I was going to say that too. Clarification: price target increase to 225.
Whew.
This is a stock that has just been in the doldrums here for a bit. It needs to, for me to really get on, and I haven't been on the Netflix bull train ever because of valuation. Again, you know how I'm a value guy, but those 190s up there, I mean, that's like the wall of, the Great Wall of China up there, because he got up there in July and August, couldn't get through it. Got up there and double kissed it in September, couldn't get through it. It's hard to really get bullish this stock until you can get a close and get above that 190. Then you start thinking about taking out 200. But it's still a little bit difficult to jump in here. You're 8 points. I guess you got room a little bit up to the upside there. But I think the Bears are a little bit in control here until we see a new all-time high above 190.
Let's just quickly go. Twitter trading up 23 cents here. Balked at the $17 level. Gave you all kinds of chances there. 4 or 5 days of a trading range. Got the move yesterday. Dennis, you had an interesting take from CNBC on this one, right?
Yeah, well, Iger was on CNBC. Great interview, by the way. But when they were previewing it, I think it was Melissa Lee. I think it was Melissa Lee on Fast Money that was previewing it, and she had talked about that on this interview coming up that they were going to talk about Twitter and how Iger thought about, from Disney, thought about buying Twitter, but then changed his mind. Then we watched the whole interview on Fast Money, and they didn't even mention Twitter. So I was like, well, that's weird. And
so he did, but they didn't air the whole thing. So
did you go and hunt down? Did you see the video?
So he did mention Twitter.
Why didn't? Yeah, well, they previewed it that way, and then they didn't show that part.
They just didn't air that part of the interview, I guess.
Do you have what was said?
Sure. Here we go. We thought, this is again Bob Iger yesterday, we thought Twitter had global reach, a pretty interesting user interface, and a compelling way that we might be able to present and sell the content our company makes to the consumer. But we decided ultimately not to go in that direction, and we took us months to do it, buying a platform called BAMTech, which that came out at the last earnings report.
So as Melissa Lee said that on CNBC, stock went from like $17.60 up to $18. They're like, oh, Disney was interested, but they're not now. It's pulled back off those highs, and obviously they've went in a different direction there, so I don't think they're coming back. So I don't really know if I interpret that as good news. Maybe it's good news that they were sniffing around. Maybe that means there's somebody else sniffing around. Maybe that's what the market's thinking when it's trading up 1.3% here today. But it makes me think that, well, Disney looked at this, and they probably looked at valuation too and said, I don't know. And that's what I've said on a long time on Twitter is valuation's scary on this one too. Great platform. They haven't figured out how to monetize it yet, though. And until they do, it's hard to just get bullish because I don't know if that buyer is coming.
Well, what Iger didn't mention is they wanted to buy it for $14. So that's
they were wanting to do a take under.
A take under. No, there was a lot of rumors we heard about that. All right, Dennis. Here we are, 9 a.m. Time to wrap things up. Any special ideas or trading ideas for the session?
When the S&P futures are down too, it's always difficult. You don't have any general direction here. What I can tell you is the banks are a little bit weaker here this morning. You can always go look at the TLT. It's up slightly here. It sometimes brings the banks down. Some of your European banks took a little bit of a hit overnight. It's not a huge hit, but Deutsche Bank is trading down 1%. So if I'm just looking at it, I see Bank of America trading down a fraction percent. Citigroup's down 17 cents. JP Morgan down 25 cents. Goldman down 0.36%. Wells Fargo trading down a little bit more. It's down 0.67% here right now. So the financials looking a little bit weak. Want to go over to oil. Oil's just trading flat here. So not a lot of action there, although some of the individual oil stocks are trading a little bit weaker here in the pre-market. Gold's up a little bit there. So you're seeing some of your gold miners trade higher. Barrick, Newmont, Goldcorp, Agnico Eagle Mines are all up a little bit here in the pre-market, but it is quiet. I mean, it's a quiet day out there. Even when I was looking at imbalances, I'm seeing the normal ones. Alibaba, which has just been a monster. It has another buy imbalance here again. It's looking like it wants to challenge that high of 180.87 that it set just a couple weeks ago. I don't know. What are your thoughts here, Joel? Is this sleepy market?
I got one number on the upside, and that's 25.32.75. That's your all-time closing high. The longer we take to get above that and continue up to the 25.40 area, I might get a little bearish. Only one number on the downside. That's Monday's close and Tuesday's low right at 25 and a half. And real quick, ICPT, has it bottomed? Ed Parker.
Downgraded today. JMP Securities did get a downgrade. And I haven't looked at this one for a few days here. Yeah, you know what? It did. And you think, okay, well, now you downgrade, you get a pullback into that. I think, and not that nothing long term here, but if it was to pull back and significantly a couple bucks here and even get anywhere near that 60 that it was yesterday, I think there's buyers now lurking below because they had 3-4 days to stop going down. That's the main thing. That's what we always stress in the show is, don't be the hero and be the first guy to come out here and say this is the bottom. Wait till it stops going down. They often give you a little rounding bottom, give you a shot. It did that for 3 or 4 days, took off above 60. Now you get a downgrade pulling back. I think that downgrade is late to the party, and I think there might actually be some buyers below.
50% retracement, you 13-point move, add 6.5 to 55, 61.5, 62. Not quite there yet. So that's where I think I'd get interested in that, see it validate the rally, hold the rally. Up here at 64, a little bit too expensive for my taste. If you want to wait and just buy it on strength, see if you can take out that double top just the day after the bad news at 68, 44, and 74. All right, we've kept Spencer too long here. Spencer, you want to wrap up the show and preview what's on Thursday's docket?
Yep, sure. Two guests for you tomorrow. Phil Bach will join us at 8:15. He works for ACI Fund, the ETF provider, and JC Peretz will join us at 8:35. I got to see JC last Thursday at the Benzinga FinTech Summit out in San Fran, or SF, as I learned that they call it out there. So JC will be on tomorrow along with Phil Bach. That's our show today, folks. You can catch the whole thing again on our podcast on iTunes, SoundCloud, or Stitcher. That's usually up in about an hour or so, or you can just go to youtube.com/BenzingaTV and catch the show as it aired live there. So that is it for us this Wednesday. Hope everyone has a good day so far, or has had a good day and continues to have a good day. We'll be back with you folks on Thursday.